I used AI to analyze stock markets for 30 days, and it didn't make me rich, but it completely changed how I make decisions. Less guessing, less noise, and much more clarity. Welcome to TechWise, where we test how AI actually impacts real life. Let's be clear about one thing. AI does not predict the market like a crystal ball. If it did, everyone would be rich. But here's what it can do. It can give you an unfair advantage in how you analyze, interpret, and act on information. And that's where everything changes. Let's start with the first use case, and this is where most people get it wrong. Because investing isn't about predicting the future. It's about understanding what's happening now, faster than others. The first way to use AI is market analysis. Instead of reading dozens of articles, earnings reports, and news updates, you can compress everything into one clear view. Using tools like GPT 5.4, you can ask, summarize the current situation of this stock, including recent news, financial performance, and key risks. I tested this on multiple stocks. What usually takes 1 to 2 hours of reading became a 2-minute overview. But here's the key difference. It doesn't just summarize. It connects signals. News right-pointing arrow, financials right-pointing arrow, sentiment. And this gives you context. Not just information. But this is only the surface, because the real edge comes when you go deeper. Now, let's take this one step further. The second use case is valuation comparison. This is exactly how I would have avoided bad investments in the past. You can ask AI, compare this company's valuation with competitors and historical averages, and suddenly, you see things like, is the stock overpriced? Is it undervalued? Is the growth justified? I tested this on a tech stock that looked promising. Strong hype. Strong narrative. But AI highlighted something critical. Its valuation was significantly above industry averages. That doesn't mean it will crash. But it means expectations are already high. And that changes your risk. Because now, you're not just buying a story. You're buying a price. And that's a completely different mindset. But here's where things get really interesting. Because the third use case is something most retail investors never do. Scenario simulation. Instead of asking, should I buy this stock? You ask, what happens if interest rates go up? What if revenue drops 10%? What if the market corrects? Using Claude 3.5 Opus, you can simulate these scenarios. And this is powerful. Because investing isn't about being right. It's about being prepared. I tested this before entering a position. I showed me best case and worst case outcomes. And suddenly, the decision wasn't emotional anymore. It was strategic. But this is only half the story. Because understanding the market is one thing. Understanding yourself as an investor, that's another. Now, let's move to the fourth use case. Portfolio optimization. Most people build portfolios randomly. A few stocks here. Some ETFs there. But AI can help structure everything. You can input your investments and ask, analyze my portfolio risk, diversification, and potential weaknesses. The result? Clear insights. Too much exposure to one sector. Too correlated assets. Hidden risks. I tested this on a sample portfolio. And AI pointed out something I hadn't noticed. Most positions were indirectly tied to the same market trend. Meaning, diversification was an illusion. And this is where AI becomes a risk management tool. Not just an analysis tool. But now comes the most underrated use case. Because this is where AI gives you a real edge. Signal filtering. The market is full of noise, headlines, opinions, predictions. Most of it is useless. But AI can filter what matters. You can ask, which of today's news is actually relevant for long-term investors? And suddenly, 90% of the noise disappears. I tested this during a volatile week. Instead of reacting to every headline, I focused only on what mattered. And this changed something fundamental. Because the biggest losses don't come from bad analysis. They come from emotional reactions. And AI reduces that. But here's the reality. And this is important. I will not predict the market for you. Anyone telling you that is selling something. But what it will do is make you a better decision maker. Faster analysis. Better context. Clearer risks. Less noise. And when you combine these 5 use cases, market analysis, valuation comparison, scenario simulation, portfolio optimization, signal filtering, you don't get perfect predictions. You get better decisions. And over time, that's what actually changes your finances. Because in investing, small edges compound. And this is the shift most people are missing. They're looking for shortcuts. While the real opportunity is leverage. AI is not replacing investors. It's upgrading them. And right now, most people are still not using it properly. Which means the advantage is still there. This isn't about predicting the market. It's about understanding it better than before. Subscribe if you want to learn how to use AI to make smarter decisions, not just faster ones.